Assalamualaikum everyone. Today my teammates and I will present our chosen sole proprietorship business, which is Wahibah Resources. Let me introduce our team member. From the left hand side, Nur FATIHAH binti Muhammad Zakrey, Fatin Nur AFIQAH binti AZMI, and Nur Sarah binti Muhammad NAZERIN. Introducing the owner of Wahibah Resources, Mr. Muhammad Ikhwan bin Zainal.
Next, I will explain further about the background of the business. Wahibah Resources strives to be the area's top building construction company. This entails having the most efficient facilities, processes, and personnel available at all times. Wahibah Resources is engaging in a variety of strategies to achieve this, which will result in competitive benefits for its client. The company is a Putrajaya-based sole proprietorship business. The management team of Wahibah Resources is highly skilled and experienced. With over 6 years in the construction sector, Mr. Ikhwan Zainal leads the management team. Wahibah Resources has created advanced formwork solutions for some of today's residential building projects in Putrajaya. Building and repairing residential constructions such as doors, cabinets, parking spaces, and almost any other sort of construction are among the applications. Standard form systems from the company are versatile and adaptable to a wide range of layouts. The Wahibah Resources system can be adapted to almost any construction requirement that calls for forming. The company's expert staff has the capability to design and manufacture any custom component or accessory item that may be required to complete the project. Owner's capital or owner's equity is the equity account that indicates the owner's stake in the business. For sole proprietorships, the owner's capital account is usually used. Wahibah Resources' owner's capital started with 10,000 ringgit Malaysia. The company plans to rapidly develop marketing alliances with industry leaders and pursue new sales of its services to residential builders. Wahibah Resources will anticipate their demands and follow through on every promise. I will also be discussing the characteristics of the company. Business refers to operations that include the creation or acquisition of items that people want and then selling them for a profit. Stevenson describes business as the regular production or purchase and sale of things with the intention of making profit and attaining riches via the satisfaction of human desires. Thus, there are some essential characteristics successful businesses have in common. One of the business characteristics in Wahibah Resources is involved in economic activities. Business is fundamentally an economic activity because it entails the manufacture and distribution of commodities and services to meet human needs. It offers job opportunities in a variety of areas, including finance, industry, and commerce. As a result of business, more job possibilities are created, resulting in economic expansion. It promotes the country's industrial and economic development. Wahibah Resources runs a business such as repairing buildings and maintaining landscape. Furthermore, Wahibah Resources business features include a profit motive. Profit is a barometer of a company's success or failure. The basic purpose of most businesses is to make the most money feasible through the production and selling of goods and services. Profit is necessary for a company's survival, growth, and expansion. Business has numerous objectives, but the basic goal of every company is to make money, and it is necessary to generate economic growth. Wahibah Resources makes a profit by providing contracted service to the customers. They provide a quotation to the customer, and if agreed, they will perform the work according to the customer's wishes. As a result, they will get a profit for every tender received by the customer. Last but not least, Wahibah Resources business qualities include risk and uncertainty. Risk is defined as the possibility of loss as well as the impact of uncertainty on a company's objectives. Profitability is frequently influenced not only by a company's efforts, but also by a variety of other factors over which it has little or no control. Taxes, changes in expected sales volume, cost of supplies and equipment are all predictable factors identified by Wahibah Resources. changes in client patterns and taste, the impact of the local economy on the customer base, and any unforeseen measures done by the competitors are all examples of unpredictable factors. Wahibah Resources' performance depends on its ability to calculate and manage risk. Insurance and risk management assist in minimizing business-related risks. In conclusion, business is a collection of organized activities for the production and exchange of products and services with the goal of profit. Now, I will pass the time to the next presenter, Nur FATIHAH, to explain to us about the classification of business items.
I will present about the classification of business item. The classification of business item are asset, liabilities, capital, revenue, and expenses. Wahibah Resources had tool, machine, office equipment, and furniture as their business asset. The creditor for Wahibah Resources are Zain and Pine, and they got a long-term loan from Mara and Tekul. For capital, Wahibah Resources owner capital start with 10,000 ringgit. Their revenue are service and sale of gold. Lastly, their expenses are worker salary, rent, and utilities bill. That's all for classification of business item.
There are 9 ways recording process in accounting apply by Wahibah Resources. Firstly, appoint employees who skill in computer software. Nearly every employment now necessitates a basic grasp of computers, and many more require intermediate to advanced computer skills. Knowledge about certain software, apps or devices can be included. Mr. Ikwan pays a qualified employee who has received enough training and understand how to use the accounting system so that his company can benefit from it. This can include specific program knowledge such as SAC. SAC Accounting is a cloud-based accounting software for small businesses. SAC Accounting includes key bookkeeping and accounting functions, extensive reporting, and inventory management into economical subscriptions. Knowing way around one or more of the common accounting software programs can be advantageous. Secondly, identify all the business transactions taken from the source documents. Mr. Ikwan's accounting cycle begins with the recording business transaction, the details of which are taken from source document. The source documents are of different types of transaction. Example of source documents are invoices, bills, receipts, debit note, credit note, and vouchers. The physical basis on which business transactions are recorded is known as source documents. When auditor later analyze a company's financial statements and need to verify that transactions have occurred, source papers are often kept as proof. They normally include a description of a commercial transaction, the transaction's date, the amount of money involved, and an approving signature. There are several safeguards that can be implemented to limit the risk of source documents not being properly recorded in an accounting system. Pre-numbering paper is one of the most used control as it makes it easier to locate lost documents. Thirdly, record all the transactions into journal. In accounting, journalizing is the process of recording all business transactions for your financial records. A journal, also known as a book of original entry, is where a commercial transaction is first documented. Your diary keeps account of all your company's transactions in chronological order as they occur. Journalizing is the process of adding new entries to your journal. When a business transaction occurs, the journalizing process begins. The transactions are classified and recorded in the appropriate book of prime entries such as cash books and journals. Journals can be classified into the general journal, purchases journal, sales journals, written inward journals, written outward journal, and cash payment and receipt journals. The process of recording transactions in the journal is known as journalizing. Fourthly, post it in the general ledger. After the transactions are recorded in the journals, the total will be posted to the appropriate accounts in the ledger. This process is known as posting. Ledgers can be classified into the general ledger, sale or debtor ledger, and purchases or creditors ledgers. Recording detailed accounting transactions in the general ledger is what posting to the general ledger entails. It entails gathering financial transactions from specialized ledger and transmitting the data to the general ledger. Initially, high-volume transactions are typically recorded in a specialty ledger such as the sales ledger. This prevents the general ledger from becoming clogged with thousands of transactions detailed. The general ledger data is combined to create a set of financial statements for each reporting period. Lower volume transactions that have already been recorded in the general ledger are not posted to the general ledger. Fifthly, an adjusted trial balance. At the end of the month or at the end of an accounting period, a trial balance is prepared. The purpose is to check whether transactions have been recorded correctly in the book of accounts. Adjustments must be made if there are errors. Adjustments are also made at the end of an accounting period for accruals and prepayments of revenue and expenses, doubtful debt and depreciation. An adjustment trial balance is created after the employee posts journal entries to individual general ledger accounts. The trial balance assures that the entire debit in the financial record is equivalent to the total credit. The unadjusted trial balance is a list of general ledger account balance at the end of the reporting period before any adjusting entries are made to construct financial statements. When assessing account balance or making adjusting entries, the adjusted trial balance is used as the starting point. This is a standard reporting that many accounting software applications may generate. It can also be done manually. 6. Preparing the worksheet. The employee will then examine a worksheet to check that the debits and credit are equivalent, as well as to look for adjusting entries. If there are many inconsistencies, changes will need to be made. 7. Adjusting journal entries. Adjusting entries are made to receive interest revenue that has occurred over the time. An adjusting journal entry is a journal entry made at the conclusion of an accounting period in a company's general ledger to note any unrealized revenue or expenses for the period. An adjusting journal entry is necessary to correctly account for a transaction that begins in one accounting period and ends in a later period. 8. Prepare financial statement. Finally, the financial statement can be prepared by obtaining information from the list of balances in the trial balance. Financial statement includes statements of profit or loss and statement of financial position. Financial statements are the on-paper record of an organization's business activities and financial position. The act of combining accounting data into a standardized set of financials is known as financial statement preparations. Management, lenders, and creditors receive the completed financial statements, which they use to assess a company's performance, liquidity, and cash flows. They're used by many entities, so this statement must be clear and easy to understand. Taken together or independently, these statements serve as an at-a-glance indicator of a company's financial health. It's up to you as a finance professional to ensure they are prepared accurately. 9. Closing the books. At the end of the time, the staff will use closing entries to conclude the temporary account, revenue, and expenses. Transferring net income into retained earning is one of the closing entries. Recommendation in protecting data in the computerized accounting system. Do a backup data, disable any lock screen notification, lock important apps from the external and internal use, keep browsing to ourselves, apply software updates, and protect the computer devices with passwords.
Next, strengths and weaknesses of recording process. First and foremost, the strength for recording process is the usage of the recording process. In accounting, is a comprehensive system that is meant to capture all identified and expert costs at the time of recording, and it is utilized consistently throughout the reporting period. As a result, being organized throughout the process can be crucial component in ensuring overall efficiency. The length of the recording process is determined by the reporting requirement. Most businesses to examine their performance monthly. However, some may be more concerned with quarterly or annual outcome. In any case, most bookkeepers will be aware of the company financial situation daily. Overall, setting the length of each accounting process is critical since it establishes opening and closing date. When a recording process ends, a new one begins, resuming the step accounting procedure from the beginning. Secondly, the allocation base for some share costs are reviewed on a regular basis. Cost allocation should, in theory, reflect a causal relationship between costs and the object to which they are assigned. The most common goal of joint cost allocation is to link input costs to the economic benefits received. This method are suitable for financial reporting, but due to inherent arbitrariness in joint cost allocation, caution should be exercised before using the data for decision making. One of the primary goals of cost allocation is to provide that data for decision making. Cost allocation is a crucial technique for cutting expenses and generating profitability. It can also be used as a cost motivator, with manager be rewarded for ensuring that costs are not amassed irresponsible. Manager will be more likely to run their department more efficiently as a result. Finally, managers are well versed in the costs for which they are responsible. The word responsibility accounting refers to accounting system that gather, summarize, and reporting accounting data pertinently to manager duty. A responsibility accounting system provides data for evaluating each manager revenue and spending items that are within his and her control. The item that the responsible management can control are listed in a responsibility accounting report. When a report contains both controllable and uncontrollable items, accountant should clearly divide the category. In a responsibility, accounting and reporting identify controllable objects in a critical effort. To apply responsibility accounting in a corporation, the corporate organization must be established in such a way that individual manager can be assigned responsibility. Next, witnesses. One of the most typical ways to start business is as a sole proprietorship. It is important to wait the witness to determine if this is the best strategy. Wahibah Resources witness with process recording is that financial and company credit are more difficult to combine. We may have a harder time obtaining financial and business credit as a business entity than a corporation. A corporation is eligible for government assistance and can easily raise capital. In most cases, a sole proprietorship is unable to do so. One of the reasons for this is because corporation has a legal distinction that a sole proprietorship does not. Following that, there are lack of financial control and difficulties keeping track of costs. Because financial reports are normally required as a routine aspect of doing business, and because one person serves as accountant, manager, marketer, and strategy all in one, single entrepreneurs are prone to overlooking financial transactions. This can lead to a considerable loss of financial control, as well as the possibility of combining commercial transactions with personal income, making it difficult to keep track of costs. Profit and losses may go uncounted in certain situations, making that time even more challenging. Finally, there is no liability protection. Personal liability is one of the advantages of the sort of company structure. We are completely accountable for our company financial operation. That means we are responsible for all bills and any legal proceeding. As a result, our personal assets are exposed, putting our money at danger. Separate business insurance is a smart idea in this instance. It is one of the most important distinctions between a single proprietorship and a corporation. With incorporation, this business or legal entity is exclusively responsible for its action. In conclusion, despite all the fantastic advantages that sole proprietorship has to offer, there are few drawbacks that business owners should be aware of before deciding on this structure for their company.
That's all from us. Thank you.